For those of you who were with me on, with Michelle and me on the last webinar we just did, welcome back. For the new attendees, welcome aboard. This is going to be a webinar telling you about some, actually some new programs that are available for self-employed. So I am self-employed. Most realtors are. Any independent contractor understands one of the biggest challenges to getting a loan, to qualifying for a home mortgage, is that your income can be one thing, but then when you count the expenses, your day-to-day operating expenses, business expenses, etc., all that really adds up and really cuts into your income, and it makes you just not able to afford as much as you know that you really should be able to. So we're going to talk about some ways to overcome that today. This will be about 20 to 30 minutes total. If you'll stay with us through the end, we will tell you how you can receive $250 credit towards your closing costs. Michelle, I don't know if they can double up the $250 credits for $500. I don't know. You'll have to
I will make it happen. I will make it happen.
All right. Michelle says she can. So, agenda real quick. We're going to talk about guaranteed rate. We'll talk about some specialized programs. Then we'll talk about how guaranteed rate can help you, how your local realtor can help you, and then how you get the $250 in closing costs. Now, for this program, if you do have any questions, if you want to stick around at the end, you could type in the questions in the chat box, and we'll get to those questions for you as well. Real quick about me, my focus has always been to serve. One of the main reasons I got into real estate, I've also been in the military between the Marine Corps and the Army National Guard since 2001. So I joined right after September 11th, and I wanted to do something to help out my nation and help out my community. So just important to me to find ways to give back. My team is part of the top 10% of realtors in Chicago. We've closed more than 1,000 residential commercial real estate transactions since 2009, so just a lot of experience that we've been able to put together. We're listed as Who's Who in Chicago Real Estate Magazine in 2016, and we have put together a robust team of agents and other professionals that can really make sure that your transaction is, and your experience overall, is as smooth and convenient and pain-free and enjoyable as possible before, during, and then through the end and after your real estate transaction. Now, I know not all of you are joining me from Chicago, so if you're from outside of Chicago, being part of the Sotheby's network, I have agents that I work with throughout the United States who are going to give you the most excellent level of service. So if you are from outside of Chicago, if you will contact me, I can certainly point you towards and get you in touch with a local real estate agent where you are, and someone who's going to be able to take very good care of you. Briefly about Michelle, she's one of the top loan originators in the United States. Last year she did over $86 million in volume. This year she's shooting for $100 million, so hopefully she's going to hit that. I think she's got a good, she's on track to do it, which is great. She was listed as Who's Who in Chicago Real Estate for the last 7 consecutive years. She has over 2,500 closed transactions under her belt with almost 20 years of experience, and she has a team of 7 or 8 dedicated professionals who work solely with her clients. So your transaction with her and with her team is going to be really, really smooth, really specialized. You'll feel like you have some really specialized attention. So that's fantastic. See if I click the wrong screen here, I don't get to advance to the next one. Okay, so I'm going to turn this over to Michelle now. She'll talk briefly about guaranteed rate and then get right into the programs.
Well, thank you, Ben. What a pleasure to be here. So I'm really excited to talk about the topic of the self-employed. I have a ton of folks that I work with that are self-employed, and we just really have got some enhanced programs to really just enable people who were in the self-employed category to actually obtain financing where they at one time could not. So just real fast about guaranteed rate, why we're different, why we have a competitive advantage over some of the other, basically the other big banks. We are not one investor. We are a compilation, and we have a platform of over 30 different investors to choose from. So it really just helps me when I'm working with the client to take in what your goals are and really just match you up with the best place to obtain financing. So When you walk into a traditional bricks and mortar bank, they offer only their product. I can offer a snapshot of 30 different investors. So a lot more options, a lot more opportunity for me to say yes to you. You know, what makes us unique, another feature is that we do everything in-house. I'm a bit of a control freak. I like everything to go smooth from start to finish. You've got a lot of different moving parts when you're buying a home, so we want to make the financing piece a non-event. We do that by my team controlling everything from the minute we talk on the phone, initial consultation, all the way to closing day. So just enables me to, you know, always exceed my clients' expectations of realtors that I work with, just so they know everything is, you know, it stays on track and goes smooth throughout the process. So jumping in, I'm really excited again to talk about some just additional enhancements for self-employed borrowers. We're going to touch on expanded debt ratios of 50%, the one-year tax return program, 12-month bank statement program, and also an asset depletion program.
So Michelle, I'm going to interrupt you real fast.
Yeah.
Some of this is kind of technical, so we don't want to talk over your head. If anything, if you have any questions about anything, normally I hold all my questions till the end, but if you have questions as we go through this, go ahead and type them into that questions box there, your chat box, and then we'd like to answer your questions as we go through this, because we're going to go through about 4 different programs, and I want to make sure we don't leave any of your questions behind. So I'm sorry, Michelle, go ahead and.
Thank you.
Yeah.
No, absolutely, absolutely. Because yeah, what's one person's question, probably others have, so please ask away. Okay, so I first just wanted to help you understand what are the traditional guidelines? Like, what are the things that we, a bank would traditionally look at for the self-employed borrower? So, and as far as debt-to-income ratios go, a traditional bank is going to look anywhere, they're going to want your debt-to-income ratios to be not exceed 43%. So, what is debt-to-income ratio? So, it's essentially taking the taxable wages that you actually report and pay Uncle Sam money that you actually pay taxes on, take that, those wages and basically divide it into your proposed mortgage payment. And actually included in that are all of your any other debts and bills that you have. So it is a formula, and essentially they don't want you to exceed 43%. So with this specific program that we have, we actually can go higher, all the way to 50%. And that oftentimes is a make or break on a transaction. So gives us a lot of additional flexibility just to bend to really just get you into the place that you want. Not because we want you we want you to love your new home, not just like it. So that's a key piece there. So and with this program, it does require 20% down. You can go up to $1 million loan amount. Credit score, minimum mid credit score is 700. And this is for primary residence, single unit, so condominium, townhome, or single family.
And Michelle, can we talk about what you mean by jumbo loan?
Yes. So with that, I'm actually, a lot of my focus today is going to be on jumbo. However, the same would apply in this program if it is a conforming loan amount. So what is the difference between conforming loan amount and jumbo? Fannie Mae and Freddie Mac, which are 2 quasi-government entities that really back 3 out of every 5 mortgages in the country, they will lend up to $417,000 as a loan amount. So anything above that becomes a jumbo loan. So it's basically placed into a different set of criteria of underwriting guidelines. In general, it's more conservative. So again, this program just enhances the traditional jumbo product and allows for more. We also can go to 50%. Fannie Mae and Freddie Mac, typically the maximum debt-to-income ratio is 45%. In this case, we also can go to 50% as well, even for the Fannie Mae and Freddie Mac loans. So in general, we just have some options to, you know, expand out and go a little bit higher than the traditional bank.
We're just trying to get our PowerPoint working. There we go.
All right.
Okay.
So second program. Okay, so once again, when I am in initial consultation stages, I hear that you're self-employed. Traditionally, what we look at is we take 2 years of tax returns, 24 months, and we do an averaging of the 2. So let's say if you have filed your tax returns for 2014 and 2015, you make 100,000 one year and 80,000, 100,000 in 2014, 80,000 in 2015. What we would do, well, if you make more in 15 and you do 14, we take 24 months. If you make less, it's called declining income, so we would take the most recent tax year and divide by 12. So they're always looking to go to the more conservative number. So what's nice about the one-year tax return program is that, let's say you did have a light year in 2014. If you were a company that purchased a lot of new equipment or a lot of new inventory, you're able to pretty much zero out your earnings for that year just because you had a heavy year of reinvestment in your company. So 2014 was your year of reinvestment in your company, but 2015 you were jamming. The revenues were really strong. We could actually, on this program, just focus on 15. So whatever your taxable wages were for 2015 as reported on your tax return, we would take that number and divide by 12, and it would alleviate the need to go back to, again, to that 24-month averaging. Because if you didn't have any income for 14, I would have to divide that by 24, and it would drastically reduce the amount we could qualify you for. So once again, this allows you to get into, a bracket. Because again, for most self-employed folks, it's not that they don't have the cash flow and the money. It's just you have many advantages for self-employment. One is you get to write a lot of things off. So the only time it is a disadvantage for that extra perk of write-offs is when it comes to applying for a mortgage. We have to use your net number, not your gross number of what you actually paid the government on, so the income. And again, just a couple quick tidbits. This program can be used for owner-occupied homes or even an investment property. As you can see, the investment property is a little bit higher credit score requirement, 740, and even can be used for cash-out refinances. So the third product is a 12-month bank statement program. So this is a unique product. So in lieu of looking at just the traditional method of tax returns for self-employed folks, we would actually get your most recent 12 months of bank statements. It can be personal and or business. And what we'd be really looking for each of those 12 months is what was the total deposit that you made into that account that given month. So again, if January was 5,000, February 7,000, March was 6,000. We would go through that entire, from today backward, 12 months, take those, the gross deposits for each month and divide by 12. So this, is huge. So again, a lot of self-employed folks have very savvy CPAs. They write a lot of things off. So again, the income is coming in, the cash flow's there, it's just not well represented on the tax return. And so this is an option and an alternative for a self-employed borrower to still prove, hey, I've got the money, I make the money, and so they will look at that as an alternative method. So down payment requirements are a little bit, more than the average, but again, if it's a difference maker of getting into a home versus not getting into a home, it's a great option. So basic parameters again, owner-occupied, second home or non-owner, can be all three. They do want to see a minimum of 2 years in the current business that you're operating. So that's a one. I just want to see that a baseline's been established with that company. And lastly, is the Asset Depletion Program. And this is really, actually also works really well for folks who are nearing a retirement stage. So maybe they've been self-employed for many years. They've been able to garner quite a bit of asset accumulation, but once again, not showing a ton of income on their tax return. So what this would allow for, so again, basic parameters, primary residence, you got to have, and second homes, 700 minimum credit score. This product, we actually can do condo, single family, and 1 to 4 units. What this does is it allows us to take qualified asset accounts and use the gross number of that and create a multiplier. I'm actually going to jump to the next slide. So it's actually is a really good formula. So it helps you to understand it. So for instance, just for traditional qualified retirement accounts, we will actually take 60%. So let's say you have a retirement, an IRA account for $1 million. We will actually use 60% of that, so we'll use $600,000. And from that, we will divide by 60 months. For just a traditional portfolio account, brokerage, stocks, bonds, mutual funds, we actually can use 70%. Because those are technically liquid and available should you choose to cash them in. So that's why they give us a little bit, give us a little more credit. So again, example of $1 million account multiplied by 70%, that number is 700,000 divided by 60 months. So again, you know, in that specific scenario, it's giving you qualification power of $11,666 a month. I mean, that's a ton, and that will qualify you for a lot. So this is, again, an excellent program. If you're heavier on the assets and lighter on the income, it puts you in a position that the rates are very aggressive on this program. So it really just affords you the opportunity. And essentially what they're wanting to look at is, yes, they've got enough, you know, they've got an ongoing proof that they can make this payment for at least the next 5 years. I mean, again, most of these folks tend to be people that qualify for this are just, you know, they've been able to establish, I've used a couple, this program is great for someone who is, I have a gentleman who just sold his company and he was taking a year off, got a really nice cash out from that sale of that company, and you know, he wasn't currently employed, but I was able to utilize this this method and get him a great rate on a new home. So that's pretty much it. Let's see. Yeah, so just in general, this is a lot, and this particular webinar, I definitely kind of drilled in and went a little bit more technical than I normally do. You know, if you've been through the process once or twice as a self-employed borrower, you know that the process is a little bit different. So, you know, my encouragement, just call. Would love to talk through, you know, learn a little bit more about what your current needs are, and just really talk through what is the best strategy for homeownership for you, whether it's your first home or your third home. You know, guidelines are constantly changing, and again, from an exciting note, we've just really continued to roll out some great new product, especially for self-employed folks. So, yeah, so look forward to chatting. And
so
then,
do you want to? You can talk about.
Yeah.
I think you kind of just went over this anyway.
Yeah, I just went over it. So yeah, just again, scheduling an appointment to call, just to learn about your goals. You would formally do a loan application, so I could really do a complete review of your income, assets, and credit with you, and then we'd really just put together a tactical strategy, lay out some options for you, so you can really just visualize what the end product, rate, program, et cetera, would look like.
Okay. And then from the Realtor piece, again, you know, I'm local to Chicago, so if you're not from Chicago or from Illinois at least, it's going to be difficult for me to work with you, but your local Realtor should have something pretty similar to this. This is definitely my preferred process. And again, if you are out of town and you'd like an excellent, well-seasoned local Realtor, I do have quite a few in my network, nation and worldwide, that I could certainly refer you to if you'd like. So anyway, step one, in-person or virtual strategy meeting. You know, I work with clients across the globe, so they can't always come to my office and sit down and talk to me. We may set up something similar to what we're doing right now, so a go-to meeting where we get to chat. But it's really important to have that time that one-on-one time, either in person or virtually, to chat about what your needs, your goals, your wants are, to make sure that the search process and the work I'm doing for you matches what you're looking for. After we do that, after we talk about what you want, then I set up some searches both on the MLS, on market properties, and then also on pocket listings. And pocket listings is a term that you'll hear thrown around. Basically, it refers to properties that are for sale but aren't necessarily listed on the MLS, aren't on Zillow, aren't on Trulia. They're more of a private listing that you only really know about if you're working with an agent who kind of has it in the market, and that's something that you know, my team and I do have those ins to have access to those pocket listings that you're not going to see with you know, with your average agent, to be honest. once we start the searches and you start identifying homes that you want to see, my team will assist and advise you during the showings, help point out things to look for, pros and cons of different properties. We'll help you identify which ones best meet what you're looking for. And then when you identify those properties, we help you negotiate the contract to get you the best price at the best terms that best suit your situation and your goals. And of course, I'm not going to just drop you at the end. My team is committed to you up to the closing, through the transaction, and then after the closing, we'll still keep in touch with you to make sure that everything's going smoothly and see if there's anything else that we can help with. All right, so again, thank you for sticking with us through this. It's really some exciting programs. I'm glad that we got a chance to talk to you about them. We'll do some follow-up webinars as well. So if you have any other friends, any other acquaintances you think this might be helpful for, feel free to pass along the information. But as a thank you, we'll give you the $250 closing costs credit if, when you talk to Michelle, you mention this webinar. And you, of course, do have to finance through Guaranteed Rate. So any questions right now other than what we already had? Okay. So Michelle, can you give us do you have any insight on example rates for those different programs? How do they compare to, like 3.25, 3.75? Are they anywhere close to those? Are they higher, lower?
Sure. Well, so we've talked about a lot. So with, I think so just in general, with pretty much all investors, they're looking at risk level. So on programs where there's a lower down payment, the rate will be slightly higher. If you're able to put down a little bit more, then the rate will be lower. The same for criteria on credit scoring. So credit scoring, that's why it's so, especially for the self-employed individual, you really want to have just an optimal credit score, because it's going to give you just such an upper advantage. I mean, a couple of these programs, there was little, I would say as little as an eighth to a quarter off market rate for very well qualified high credit score borrowers. But again, that's kind of a little bit of, it's a very wide range answer, but I will be able in the consultation to say, hey, today's market rate, if you walked in and just had traditional income would be X, and this, you would be able to obtain whatever. But yeah, so I would say not even an eighth to a quarter off. Sometimes it's par. It's just depending on the product. The ARM products, there's a wide range of ARM programs, and an ARM adjustable rate mortgage, that's what the definition of an ARM is the rate is fixed for a certain period of time. So there's a 5-year ARM. The most popular programs is a 5-year ARM, so rate's fixed for 5, 7-year ARM, rate's fixed for 7, and then 10-year ARM, the rate's fixed for 10. It tends to be a popular product because, at least, in large metropolitan cities, people move around a lot, but it also affords lower rates. So in those programs specifically, they could match right on even with the market. So it's great.
Okay. All right. So any other questions? If you do have any, type them into that box. Let me give you just a minute to see if we have any more come in. Okay, so that wraps it up here. I'm going to just get you our contact information real fast. So that's me. That is my face. I'm the one talking to you right now. There's my contact information, my website, and my email address. If you have any questions whatsoever, feel free to reach out to me. Again, if you are outside of my market, but you'd like to work with a very good agent, feel free to reach out to me as well. Use me as a resource. I'm here to answer your questions. Our consultations are always free, and we just like to help people out. So there's my contact information. Here is Michelle's contact information. You can give her a phone call, shoot her an email. She's extremely accessible, and we would love to hear from you. So we'll be following up as well. But again, want to thank you for attending, and look forward to chatting with you soon.